Hello investors and traders, today I'll speak about the stock market, main indexes in this year, B2C, DXY, TLT, and the main assets that now is interesting in my mind. So let's check for the beginning the S&P 500, the main US index. So here in my mind, if we speak in a global picture, so it was 5 move waves, it was impulse since 2014, the first wave, the second, the third, then we had a first wave. Here we had a triangle, it was A, B, C, D and E, and then with the coronavirus it finished. So then it was another impulse, the fifth wave, and now most probably we are in a correction. By the way, here look, now it's a decreasing channel. Last year, here by the way, weighted moving average for the last 200 days, so we still can't break it. And by the way, we trading near the highest border of this channel, and also I think it can be a 5 move A. And by the way, here this figure, I think it can be expanding diagonal, yes, so it can looks like this one. So it was the first wave, the second, it was the third, the fourth and the fifth. And let's change the color, and that's why I'm expecting to see the S&P a little bit lower. So I think it can be such a way. So I'm expecting to see the S&P 500 at this year 3040, 3050. Anyway, I'm expecting to see a correction about 15%. So that's the reason that I can buy stocks heavily now. Of course, there is a nice valuation now, very cheap stocks, but now I'm buying most dividend stocks. And also, why we can see this correction, let's move to another side. So we have the Fed interest rate decision in 3 days from now. Now the current rate, let's check it, it's 4.5%, and the expectations that we will see a hike, so about 98% that the rates will be hiked by 0.25%. It will be the 1st of February, but then the next one, in March, we may see another hike, and then most probably the expectations that it will be already the interest rate about 5%. You see, 5% is no jokes. It's I think it's a lot, because the mortgage rates and all the other rates, of course, are related to each other, and it can cause a turnover in the stock market. By the way, it's now about 4.5, but historically we can see that 2006 it was above 5%, 2020 years ago it was 6.5, and in 89 it was about 10%. 10% interest rates. I think it's a lot. Of course, it's a huge number. Now we are here, so we can see that the velocity, how fast it increased the rate, because all the corona, the pandemic period was zero. It was very low. Now in 3 quarters it increased from 0.25 to 4.5, so the velocity is very fast. So anyway, the expectation that the rate will be grow. That's why maybe the main reason why I'm expecting that the indexes and the stock market won't feel it's very very confident in the future quarters. Let's move to the Nasdaq, the IT companies index. So here is maybe the same situation. We have here two support levels. It's 1100s and 1000s. By the way, here we didn't get the weighted moving average yet. Anyway, we saw the report of Microsoft last week. It was weak, not very stable, not so many of the analysts didn't like the projections of the company. The Intel awful, the Intel report, and we may expect the other FANGMAN stocks, Facebook, Apple, Google, maybe that the reports won't be so good as expected. So anyway, now we can see another correction in the Nasdaq. The TLT, it's the US Treasury ETF, one of my main assets now in the portfolio. So here I told you 1 month ago at the 1st of January, it was another video with my projections for this year. So my target for TLT is 120. Look, here we have a major support level. It's 92 and 106. So by the way, now we are in support level, and we can easily to get here. Yeah, so the target is 100, and yeah, the white line 120, and this case still we have a potential of grow about 12%, but it's don't forget that the TLT is the most safest, one of the most safest assets in the whole market. So still the RSI, the momentum indicator, is 36. Until we are oversold, so I think it's still nice points, nice levels. Maybe to buy this asset. The DXY index dollar. So in the correction, it was a range here, 90 and 100. We broke this range, we're out of this range, but now we're testing it's like a resistance level. If we'll break, of course we will back to the range. Most probably I think yes, we will trade it a whole year in this range. So maybe the picture will be something like this. I'm not sure, but anyway, it's my opinion about the US currency. Of course, we now see interest rate hikes by the Fed, but we see the index is not react to this hiking. That's why I think maybe it will finally back to this range. And the B2C, the Bitcoin, I told you at the first video of this year that Bitcoin is also one of my bets for this year, and it was 1600 if I'm not mistaken at the beginning of the year. By the way, here we can see it, its performance about 40%. Yeah, look, only in 1 month it's up about 40%, so it's very nice. It was a opportunity and chance to buy it here at 15,000, 16,000. Now it's 23. The target is 30, so till the target we have a potential about another 30%. So half of the road we already done. Here it was an impulse, not something special. 5 waves, first one, the second, the third, the fourth, and the fifth. Then we had ABC move, clean correction, yeah, flat correction, ABC, and now we just made back to this resistance, to this resistance level, and of course I think we may check it. But of course, if you don't want to buy Bitcoin, if it's difficult to you to Binance and all this stuff, there are a lot of stock related of Bitcoin related stocks. For example, Coinbase. So this stock is up from the beginning of the year more than 60%. So very nice and very easily. The correlation between Coinbase and Bitcoin is very high. So there are a lot of stocks that you can buy and find stock Bitcoin and other cryptocurrency related stocks. And the last one for today is the US government stocks, the US Treasury, the 10-year, the 2-year is now there. Yield is 4.5 and the 10-year 3.5. So what I can say that the near-term risks are higher than the long run, so most probably there are expectations of recession. Technically, we are already in a recession because 2 consecutive quarters of negative GDP, it telling us we are in recession. So I think the best time and the best point to buy stocks, it can be when now we have inverted yield curve. So the best time and the best point, it can be when the long run will be of course higher than the short term dividend treasury yield. So for example, if the 10-year will be 4% and the 2-year treasuries will become 3.5%, so it will be okay. So generally they should make switch. Then it will be signal for the stock market. Then yes, now it can be a perfect and the best time to buy. Now I'm very cautious. I'm buying just like dividend stocks like AT&T, WBA, Philip Morris, because generally I'm expecting another slump in the US stock market. So if you like this video, press the like button, don't forget to subscribe, and see you on the next time. Bye.